let's look at Water Resources ETF. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we will go to a sector, and that is utilities. So here are, a few ETFs, and Water Resources has seen, a 51-ish% here from the low, and is basically at the 52-week highs. So let's look at the charts. This is, big picture weekly data points. PHO is the ticker. I did find some time cycles, and when you look here and compare the time cycle with the price action itself, you do see that, there's a decent match. Here is the low of the time cycle, high of time cycle, low of time cycle. So you see that the rhythm has been reasonably consistent throughout, which is very interesting. In this case, because there was the expectation for us to have a declining well, we did have a declining time cycle, but we didn't see anything like that here in the price. So that is a different situation at this point. There can be delays So when we look at the RSI, so this is the weekly RSI, and you can see that we currently have a very extreme reading. Throughout the history of this ETF, this has definitively not been an ideal time to become bullish. So here we had a similar reading. We had a bit of a rough period, but nothing really viscerally bearish. This instance, we definitively had a bearish move. This instance, it turned bearish. Here, we did go down here to test the green 50-week moving average, so definitively we did have a correction. Here, we test the blue 100-week, and then we go far lower. The PHO, which also is a very, key level to watch for, access to the upside or the downside. Well, we have never been this far away from the red 200-week moving average. So definitively we have seen a move that is very bubblish. The bulls are still in control, and that is something we have to respect, notwithstanding that the bulls are being nuts. They are being very, very, very ballsy, taking a lot of risk, and it is in those situations where the best bearish opportunities can develop. So here with the daily data points, RSI is at an extreme reading that has triggered many, many, many pullbacks, corrections, and even bear markets in the past. And PHO also at a very, very overextended level, which is a historical anomaly for this ETF. So the technicals here are more favorable to bearish strategies. Looking here at the seasonality over the last 5 years, then we do see that September, October, November, they are strong. Looking at the last 10 years, then we do see that there is a tendency for August to be one of the weaker months, though September, October, November tend to be strong. Looking at the last 17 years, then August and September tend to post losses. So minus 0.4 and minus 0.1. October, even though it closes higher 73% of the time, there usually only is a 0.5% gain. So when you add, these together, so basically August, September, October, basically at 0. Given how dependent this ETF has been on momentum, 3 months of potentially shuffling here, it could be that trigger that initiates, that long awaited for correction, which also fits with what we saw with the time cycle, even though we haven't seen that pullback yet. So, but there is the expectation, though, that we are very, very, very much overdue that cycle correction as well. Here we have blown outside of the trend channel. The best time to buy here, as you can see, has been to buy at trend channel support. Buying at resistance has historically not been a good idea. So even though we have broken out above here, it's a breakout bullish. It is a sign of strength among the bulls, but it is not an ideal time to buy. You know, buying breakouts is a good way to miss the great moves from pullbacks. I mean, buying breakouts is literally the opposite of buy low and sell high. Okay, so yeah, we do have excess here. When we look here and compare Water Resources ETF with the S&P 500, and we look here at the price earnings, so it is 33.81 here for Water Resources, 22.2 for the S&P 500. So the Water Resources ETF, price earnings wise, it is 52% above the S&P 500. So there's definitively been a lot of excess here. I mean, we are not talking about, you know, high tech stocks or anything like that. You know, this is a utilities ETF. This is substantial excess for that kind of ETF. The dividend here is really just terrible, 0.26%. It is a dividend, but you literally get 1% more here for the S&P 500. Yeah, you certainly cannot make, you know, a dividend case for holding on to this ETF. So here are the holdings. Here you can see the sector breakdown: producer manufacturing, utilities, health technology. Some of the categorization can be a bit wonky though. I think that when you look here at the companies, you can see that, you know, these are quite a few of them are just classical, you know, utilities companies. Here is the market cap breakdown. We do have some decent balance here, though. Yeah, small caps they are rare in the utilities space. It really is a place where the big boys have a lot of power. Okay, so to sum up my take, bulls are currently in control, but they have become a bit excessive, clearly. Looking at the price earnings, looking at the time cycles, the seasonality, overbought levels, it is pretty clear that the bulls are pushing too much. They are being very ballsy, taking on a lot of risk, and that tends to create good opportunities for bears. So my bearish radar is flashing louder now than my bullish radar for this ETF.